The Bank of Japan is said to be considering raising its inflation forecast at a policy meeting later this month after surprisingly strong results from annual wage negotiations. Meanwhile, Governor Kazuo Ueda has weighed in on the impact of a weak yen.
Monetary policy isn't conducted for the purposes of controlling exchange rates. Exchange rates may have an impact that can't be ignored on economic and price trends. In such a situation, there's a possibility of considering a monetary policy response. This is a general statement, though.
For more, let's bring in our Asia Economy and Government Senior Editor, Brian Fowler. And Brian, just talk us through sort of the ramifications for any sort of possible change to the inflation target on the outlook for policy and also, I guess, for the yen as well.
Yeah, well, it definitely would raise the likelihood of a second rate hike this year. Economists we've surveyed, 60% of them say they expect another rate hike by October. But the key is what's driving this. And as we just heard earlier, it's the wage hikes. And big wage hikes do two things. First, they put more money in the pockets of consumers, and that could lead to a revival of spending. Household spending has fallen in every month for a year now, but Governor Ueda has flagged the possibility or the expectation that personal spending will start to recover in coming months, and I think he's really referring to the wage hike effect with that. The other thing the wage hikes do is they give an incentive to companies to raise prices. Of course, their personnel costs go up for the wage hike, so they need to cover that to keep their margins healthy by raising prices. We've seen a lot of price hikes over the last year and a half, which we hadn't seen for decades during deflation, and we expect to see more of those this fiscal year.
Ueda also says that the BOJ would reduce stimulus further if the basic inflation rate nears 2%. So how much conviction is there in terms of not just getting there, but staying there, right? Are we sort of basically there?
Yeah, that's the key question. So inflation in Japan has been at or above the BOJ's target for 23 straight months. We get the March data next week. That should confirm 2 full years of being at or above that target. The problem is a lot of that price hikes, that's coming from temporary, transitory factors. So, for example, last month with the February data, we saw a big jump in the CPI that was due largely to base effects, because a year ago, Kishida rolled out subsidies for utilities, which weighed on prices back then. That effect was removed, so prices, of course, jumped this year. The other thing is the weak yen, which has driven up import costs, and that is an unwelcome source of inflation. Ueda really wants to see demand-led inflation, so that's why he's putting so much faith in these wage increases, and that's why he's going to be spending so much time looking at how those filter through the economy as soon as those wage hikes actually start to take effect from around June.
And so how did the BOJ forecast compare with what we see from the private sector?
So far, BOJ and the private sector have been pretty close. BOJ's latest forecast for this fiscal year is 2.4%. That's what it's going to raise. We think we're going to see a higher forecast coming later this month. Private sector's been doing the same thing. BNP Paribas raised its inflation forecast for this fiscal year to 3% from a previous 2.2%. So that's also based on the wage increases that were so surprising. And we also saw SMBC Nikko raise its forecast to about 2.6% for this fiscal year. So I guess you could say that the BOJ is in line. It's going to be catching up with the private sector if it does go ahead and increase those forecasts this fiscal year.